Hello everyone, I'm delighted to see you again. Welcome to the Good Morning Trading for Thursday, June 11th in the year of our Lord 2026. A trader speaks to traders. Oh, we lost connection. Hey there, it's me. Sorry for the delay with the Good Morning Trading. I was on the Good Morning Trading Premium with people from my school chatting and answering questions. I lost track of time, so here we are. I'm half an hour late. Well, they got an extra half hour, so I'll keep it short and get through this quickly for you. U.S. inflation has risen to 4.2%, the highest in 3 years. This is the much anticipated statistic, and as a result, Wall Street ended lower. We also had Oracle's earnings released after the market closed, a record quarter for Oracle, yet the stock still dropped. So now, even good news is starting to make the market fall. That's not a good sign. That's not a good sign. And stay until the end. We'll check out the anecdote of the day. We'll see what happened on a Saturday night in 1979. What were you doing on a Saturday night in 1979? It changed the history of interest rates. There you go. And it's interesting because I think we'll be talking about rates again. In the coming weeks, we have 3 major events that'll set the pace for the session, starting with Oracle's reaction at the market open. We'll see if the AI sector gets penalized or if maybe Oracle's results, which are still exceptional, will provide reassurance. Then the European Central Bank at 2:15 p.m. They'll give us their guidance on interest rates and Christine Lagarde's speech at 2:45 p.m. And then at 4:30 p.m. we'll have the U.S. Producer Price Index. I said there were 3 important events. Oracle, yes, and the U.S. Producer Price Index. 2:30 p.m. Yes, the central bank and Christine Lagarde's speech. That was the odd one out. Just a joke. No, it won't have any impact and nobody cares. So what happened yesterday? Wall Street kept falling and falling after the inflation numbers, which really scared everyone. But now that's no longer even a question. The question is, will the Fed actually lower rates? Or will they do the exact opposite? People are wondering, what if they actually raise rates to bring down inflation? Let me quickly explain the economic system to you. Inflation, in a way, it's like an engine that's revving too hard. The prices just spiral out of control and so on. The fire is burning way too hot. When you have a fire that's too intense, you can try putting water on it, which doesn't always work, or you could pour gasoline on it, which definitely doesn't work, or you can deprive it of oxygen, and that actually works, and that's exactly what they're doing. When there's inflation, really high inflation, what do central banks do? They raise interest rates. Why? Because interest rates are guaranteed rates with no risk at all. So basically, they want there to be less fuel, less air feeding the fire. Sorry, who are they? Fuel as well, which gets injected into the economic system. The guy with $1 million, right? Instead of investing in companies that would create growth and further drive up prices, they think, yeah, well, I'm not going to take any risks. Interest rates are high, so I'll just put it in the bank for a year. And as a result, there's less oxygen, less fuel. And inflation goes down. On the other hand, if inflation drops too much, we could also enter a recession, so it's a delicate balance. And Wall Street has completely shifted. Just 6 months ago, all anyone talked about was rate cuts. So that was very favorable for the economic engine. But according to the economic engine, especially with AI, it's moving too fast, way too fast. Prices are rising way too fast, and American wages are also increasing way too quickly. So we'll see. If all goes well, that's next Wednesday. What will they tell us? The Fed, they're not going to raise rates next Wednesday. However, in the speech by the new Fed chair, they might talk about it. And that could either reassure the markets or not. Let's move on to technical analysis. All right, I found the right button on the first try, so our NASDAQ, well, we've got our base. What's pretty amazing, look, I mentioned this to you yesterday. We hit right on the weekly support one, and that was the bounce point. Once, twice. But be careful, if we touch it a third time, I absolutely won't try to play the rebound, not at all. Even if I see it starting to bounce, I'd rather let it go without me, because on the third touch, if we hit it again, that's when there's a real risk of breaking the support. But look, it's still beautiful. I think there's a certain beauty to it. In the price action and on the chart, we touch it exactly to the unit and boom, it bounces. Go ahead, that's beautiful. Here, we're seeing an attempt at a rebound. Well, it's not very strong. We're still below last week's low. We're right at this week's low, so that means we've had a red week. When, as we can see very clearly, my ideal scenario, since I'm a buyer, would be for it to keep going down today, for it to keep going down on Friday, and then on Friday at 9:30 p.m., half an hour before the US market closes, it tries to rebound. That's one of my combos, my golden combos, and that's it. I'm not scalping on this kind of thing. We'll see, but in any case, I'm on pre-alert for Friday night, so there's no point inviting me out this Friday night if it keeps dropping today. On Friday night, late in the evening, I'll be in front of my screens to see if there's a rebound, an interesting rebound, so be careful. And then at 2:30 p.m., things might get volatile too, and you can see it. There's a lot of nervousness in the order book. Things are going all over the place. There is. My trading day went really well yesterday. Then I stopped, even though I was really on a great streak, because it was starting to get a bit out of control. At that point, you could tell they had no idea where they were going. We were seeing swings of 30 to 40 points in no time. I said, okay, that's enough. Don't push it any further. Protect your gains, get a good night's sleep, and tomorrow's a new day. And sure enough, today is a new day. It's incredible. It happens every night. That's the S&P 500 for him. Same thing, a bounce off its middle S2, or rather a bounce off the 7,250 level. Both were touching, but the bounce was much less sharp. Because if you look at last week's low for the NASDAQ, that's exactly where we are right now. And as for the S&P 500, it's still far from that point. It's missing about 0.5% for the S&P 500 to reach last week's low. So it's much weaker, and if we draw a downward trend line, it's very clear. It's below its downward trend line. We don't touch anything, and normally I should draw the downward trend line for you here, so I'll do that now. There we go. I found the little trick. So let's start roughly here. There we go. Here we have our trend line. I like to use our downward trend line here. As long as we're below IG, buying's really extremely risky. Now the Dow Jones, just to show that everything is going badly, even the Dow Jones took a big hit. But that's precisely because of American inflation, which is affecting everyone, absolutely everyone. The Dow Jones was holding up well on its own. It held up very, very well. It resisted for 2 weeks, but yesterday there was a sell-off. Everything dropped. They even went after the Dow Jones gold. Okay, quickly. Well, it's still dropping, as you know. It's been 2 months now anyway. And actually, that's why I saw on the news they did a 5 or 6 minute report on gold saying it's a historic opportunity, that gold is at its all-time high. So either they filmed the video 2 or 3 months ago and are only airing it now, or, and this is what I think, they're just total losers. So about Bitcoin. It's been stagnant for a week, but it's still at the lows from 2 months ago, so not great either. Really not feeling like buying Bitcoin at $60,000, especially since there are absolutely no signs of a rebound. And right now, it's still dropping pretty hard, you know? Lately, it's bounced back a little bit. We went back above 80, even $94 overnight, and gained 10 overnight. Well, we went back to around 90, so right now, depending on how many missiles are being fired back and forth, the price of oil is fluctuating quickly. But still, if we take a little step back over the past 2 weeks, the CAC 40 has been on a rather bearish trend. Quick update, it just opened. Well, look, as I said yesterday, the day before, last week, nothing has changed. And for the DAX, there's an attempt to rebound, but it needs to break through the 250 level. It just broke through them right now, as I'm speaking to you. It's going to try to stabilize at this level, 250 support 1W. As long as it's above that, it might try to reach its middle, monthly S1. But look at it too, it's very low compared to its lows from last week. All right, let's go. We're going to do our little barometer, today's topic, and the anecdote. I just need to remember how. Well, there we go. Hello, everyone. So, as you understood, today's barometer is the rate, inflation. We're going to talk about it more than about trading rooms in the coming weeks. So, still, consumer prices in the U.S. rose by 4.2% year over year in May, so that's over a rolling year. Obviously, this is driven by energy. As long as there's an issue in the Strait of Hormuz, inflation is going to stick around. And even if the conflict is resolved, etc., it can still take 3 to 6 months before prices ever return to their original level. Because if prices go up by 3%, they might only drop by 2% afterward. If prices drop by 2%, they might go back up by 3%. Basically, we're always on the same track. Merchants have to make 11. So if you've gotten the merchant used to you buying your kilo of tomatoes for $3, why would he lower the price? He'll set his kilo of tomatoes at $3.50. Oh, there aren't many people buying tomatoes at $3.50 a kilo anymore. So he puts it back to $3 and people keep buying at $3. Well, the price is $3 now. That has nothing to do with the fact that he buys it at 90 cents a kilo. The price is actually set according to demand. That's all. I could explain it to you. I know it very well. When you start managing supermarkets at that level. So today's topic, let me get back to it, is Oracle. The referendum is actually about funding artificial intelligence. I wanted to come back to this because for the quarter, there were $19.2 billion in revenue, up 21%. The cloud sector grew by nearly 50%, and there's an order book of $638 billion. We've got time to see how things play out, guys. We've got time to see how things play out. We have $638 billion that should be coming in as long as the clients don't go bankrupt, and yet the stock dropped 7% after hours following these results. Why? There's one reason, summed up in a single word: cash. Oracle burned through $24 billion in cash in a single quarter and announced it would raise $40 billion. So maybe they have more than $638 billion expected to come in from customer orders. But to fulfill those customer orders, you have to burn through cash. That's it. That's the problem with AI. It consumes an enormous amount of cash. So now they want to raise $40 billion. They all want to raise $40 billion. $90 billion for Google, $40 billion for them. Well, there's no need to panic. Bank of America, which still sees the stock at $240 because it says its fundamental strength is the continued growth in demand for cloud services. So we have a bullish scenario for Bank of America. The order book is actually converting. It really becomes cash, and the market forgives cash that is burned indiscriminately. Bearish scenario? Here we have an increase in rates. Because every 0, 25, or 50 additional rate increase costs you 30 to 40 billion. It costs you very, 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 very dearly. So now we're reaching a point where if they increase the rates, it's going to put a lot of pressure on AI. They're going to have to think twice about their investments, as we saw together earlier today. Everything related to Europe and the ECB. Christine Lagarde, whether she speaks or not, it doesn't change anything. Not at all. There you go. So let me share a little anecdote with you. Let me remind you, I had asked you what you were doing. On a Saturday, specifically Saturday, October 6th, 1979. If anyone can tell me exactly what they were doing on October 6th, 1979, hats off to you, really. Honestly, I have absolutely no idea. I was 5 years old. I have absolutely no idea. Oh, maybe that was the Saturday I swallowed my plastic cube and ended up in the emergency room. Yeah, that was for the peanut incident. I have no idea what I was doing. October 6, 1979. But that night, Paul Volcker, who had just been appointed chairman of the Federal Reserve, calls a surprise press conference. Normally, people don't work on weekends. But here on a Saturday night, bam, he calls the press. Okay, the new Fed chairman calls the press to declare all out war on inflation. US interest rates would rise to nearly 20%. Remember what I told you? To put out a fire, you take away the oxygen. If you have risk free interest rates at 20%, are you really going to invest in companies? You take your little $1 million, put it at 20%, and by the end of the year, you'd make $200,000. And what happened? He did, in fact, wipe out inflation. But what did that lead to? A massive recession in the United States? So you have to make a choice. If your finger hurts, there's a solution. They cut off your hand. Now your finger doesn't hurt anymore. That's pretty much what he did. Paul Wagner, with a lot of determination, so be careful with Paul Wagner. If your finger hurts, he'll cut off your whole arm, just like that, no hesitation. No joke. But remember this, in the stock market, all the major changes, all the big shifts, when there's coordination, for example, during COVID, when all the central banks in the world acted together, that's what allowed the market to bounce back. Like crazy, and it always happens over the weekend. That's why holding positions over the weekend, doing swing trading, that's the biggest risk you take with your portfolio. Because all the major economic and political decisions, all the big announcements, wars, look, it's always on the weekend. Always on the weekend. When the markets are closed, that's when you can start a war. If you want us to become billionaires, I'll tell you, it's actually very easy to become a billionaire. No problem at all. We just need to get a small group together. There you go. We fund some mercenaries who, for example, blow up all the oil pipelines in Angola. Okay, we know they're going to blow them up on Sunday. So what do we do on Friday? We short. We short the oil companies, especially the ones with the pipelines. We load up on oil options. On oil, they blow everything up. They blow everything up on Sunday, and on Monday, we're billionaires. That's it. So don't worry about it. When there were terrorist attacks on September 11th, for example, there were some very unusual stock market movements a week before. Well, yes, that's how Al-Qaeda was funded for decades. Because those guys knew they were going to carry out the attack. They knew it was going to wreak havoc on the markets. So they started shorting American airline companies. They started buying a lot of oil. They were market anomalies. We realized it afterwards, of course, with totally improbable volumes on options with mind-blowing leveraged effects. Well, there you go. They were in the know. So if you want to be a billionaire, don't contact me. I don't want to hire spies. After that, you have to manage them. It's complicated. It's complicated. But there you go. Think about that. All the major developments in all the markets. It's always been on the weekend. And when he even called in Paul Wagner on a Saturday night, when normally Saturday night is for watching NBA games, it means there's a really big problem. So thank you for sharing this moment with me. Thank you for supporting me. And the only support you can give me is by leaving a like. I'm not asking you for money. Just leave a like. That's really the least you can do. And tell people around you about this channel. And then I hope tomorrow or the day after, or at the very least next Monday for sure, you have your history channel, history, economics that you don't know yet, psychology, which is going to be very useful for those who trade. And then I'm going to start my little daily show, like Good Morning Trading, except it'll be about current events. All of this just to get hated by all the extremists, and I love it, and even by the ultracentrists apparently. We live in such a polarized world that just saying white makes everyone think you're saying gray. No, I said white, no, black. I don't even remember both. Yeah, otherwise it's racist. I said white, black, yellow, red. There are other colors. Blue of course, blue, obviously. Avatar blue. So there you go, all the colors. We love all the colors of the world, Heater. All right, kisses, I can't wait to say my nonsense. Anyway, give it a like. That would be nice. And if you know, that's the little thing. Great. Big kisses to y'all. See you tomorrow morning.